Hello everybody, my name is Rashabh. Welcome back to my YouTube channel. This is our revision lecture number 4 of MCQ Oriented Fast Track batch of CA Final SPOM Corporate and Economic Laws. In this particular video, we are going to cover Foreign Exchange Management Act 1999. A lot of students were having trouble with respect to this particular chapter, so I thought let us make a video on this particular topic, and I have summarized this entire chapter in just 14 pages. That's all. You have to read just 14 pages to score 100 out of 100 marks, 100 out of 100% marks in FEMA chapter. So without wasting much of time, let us begin. Before we begin, a humble request to all of you, please share this video to your all the friends so that whoever is having doubt with this particular chapter, whoever is having their examination, SPOM examination, they can get benefited from this particular series. And this entire PDF you will get into the Telegram channel, the link of which is given into the description. Please do check out that particular channel and join that channel also, and you will be able to access this particular document there. Now let us start with Foreign Exchange Management Act 1999. If we talk about important definitions, so there are a lot of definitions given into the chapter, but I have taken only the important ones. The first one is who is an authorized person. We will be seeing a lot of places where the term authorized person is used very frequently. So what does the mean authorized person means? So it means an authorized dealer who could be a scheduled bank, AD category 1, AD category 2 bank, money changer, maybe the hotel restaurants who is having the license to exchange money, and the offshore banking unit of SEZ unit. XEZ unit के अंदर if banking unit is established there, which is an offshore banking unit, then that is also covered under the definition of authorized persons. Now moving on to the second definition, it is basically capital account transactions. So what does a capital account transaction means? It means alteration of assets and liabilities, including contingent liabilities of person situated outside India, of person resident outside India. So the person resident outside India, if there is a change in assets and liabilities of such person outside India, or there is a change in contingent liability, let's say some person has given some guarantee and there is a change in that particular guarantee, that is a kind of contingent liabilities based upon some certain events that is going to occur in future. So that is a contingent liability. If person resident outside India is having any kind of alteration in their assets and liabilities, including contingent liabilities, then that is accounted as a capital account transaction. Apart from that, a person who is resident in India, who is having any change, any alteration in assets and liabilities situated outside India, then in such a case that transaction is also considered as a capital account transactions. Please note that CL contingent liabilities are not relevant in case of person resident in India. Now moving on to the current account transactions, these means a normal banking normal transactions that is being undertaken, like sale of goods outside India, purchase of goods from import export. So all these are current account transactions. Now moving on to the very most important definition, it is basically person resident in India, whom you will consider who is person resident in India or who is person resident outside India. So for that, individual. So this first the point number 1 and point number 2 talks about the individuals, a person who has gone out of India. So before this, please read this: person residing in India for more than 182 days during the course of preceding financial year. A person resident in India is a person who stays in India for a period of more than 182 days. Please highlight this. This is more than 182 days. If it is less than equal to 182 days, then such person is not considered as person resident in India. Now apart from this, a person resident in India for more than 182 days during the course of preceding financial year, that person is considered a person resident in India. But this shall not include what? This shall not include a person who has gone out of India or stays outside India for the purpose of employment outside India, business or vocation outside India, or any other purpose which indicates his intention to stay outside India for an uncertain period. So those persons are not considered even if they have stayed for more than 182 days during the preceding financial year. Still they will not be regarded as person resident in India. So this is the very important exceptions, and you have to be very, very careful with this particular exception. Now moving on to the second point, it says a person is not considered as person resident in India if such person has come to or stay in India. If a person has come temporarily has come to India and stays for more than 182 days, he will still not be considered as a person resident in India. But again, there is also an exemption, there is also an exception given to this particular point, which says that if a person from outside India has come to India for the purpose of employment, for the purpose of business or vocation, or for any other purpose which indicates his intention to stay in India for a period of more than 182 days. In such a case, such person would be regarded as person resident in India. So in the first case, there is an individual who is an Indian citizen who stays in India for a period of more than 182 days but goes out of India for any of these three reasons, then he will not be considered as person resident in India. In the second case, a person who is resident outside India comes to India for any of these three reasons, then the such person would be considered as person resident in India. So please be very careful with this. Now, any person, body corporate, registered or incorporated in India, any office, branch, agency of India owned or controlled by person resident in outside India, those are not to be considered as person resident in India. Any office, branch or agency outside India owned or controlled by person resident in India, that is also not considered as person resident in India. Now, who is a person resident outside India? Means a person who is not a resident in India is called as person resident outside India. Now, moving on to the section number 3 of FEMA Act, it talks about dealing in foreign exchange. No person shall, without the general or special permission from the Reserve Bank of India, deal in or transfer any foreign currency, foreign security, or not being an authorized person. If a person is not an authorized person, then he is not entitled to undertake any kind of transaction with respect to foreign exchange, with respect to foreign security. He is not eligible to make payment to or for the credit of any person who is a person resident outside India, who receives any payment by order on behalf of person resident outside India except authorized person. Matlab, a person resident in India receives any payment on behalf of person resident outside India, then such person is not entitled to receive any such payment until and unless such person is an authorized person. Who enters into a financial transaction is not eligible to enter until and unless such person is having a special or general permission from the Reserve Bank. For this, I have made an example. There is an example in your ICI module which says that a person resident outside India, brother has an insurance policy in India. I have a brother who is resident outside India who is having an insurance policy outside India. He requests me to pay insurance premium on his behalf. So am I eligible to make any kind of payment on such a person resident outside India? So the answer to this question is no. I will not be eligible to make any payment to or for the credit of person resident outside India, and it is strictly prohibited under your FEMA Act 1999. Now move on to the current account transactions. So we will call it as CUT. CUAT, CUT is current account transactions, CAT is capital account transactions. So current account transactions section 5 talks about 3 schedules. It has given 3 schedules. The schedule number 1 talks about prohibited transactions. Matlab, these are the transactions which you cannot undertake even if these are current account transactions. Schedule 2 talks about transactions which need prior approval of central government if you are going to undertake those transactions. And schedule 3 covers those transactions which need prior approval of Reserve Bank of India if you are willing to undertake those kind of transactions. So how will you remember? Schedule 1 prohibited transactions, Schedule 2 central government, CG means Schedule 2, do 2-letter word, CG means transactions which require prior approval of central government under Schedule 2, and Schedule 3 is basically your RBI 3 letters, and Schedule 3 is for transactions which needs prior approval of Reserve Bank of India. So this is how you can easily remember all these 3 schedules. Now what are the prohibited transactions? You cannot make any remittance for the purpose of lottery winnings. You have won any lottery amount, you cannot make cannot remit this transaction this particular amount to outside India. Income from racing or riding. You undertook any horse riding or horse racing competition. In such a case, if you earn any income, then that income also you are not eligible, you are not entitled to remit outside India. Likewise, you cannot remit outside India money for the purpose of purchasing lottery tickets, band, magazines, football pools and sweepstakes. So these are the some of 4 transactions which are completely prohibited, and you cannot make any remittance for the purpose of purchasing these tickets or magazines. Now there is point number D. It talks about payment of commission in forex on export made towards equity investment in joint venture, wholly owned subsidiary of Indian companies abroad. Now, point number 5, remittance of dividend by any company to which the requirement of dividend balancing is applicable. मतलब a company remittance of dividend cannot make in excess of the dividend balancing requirement. For this, I would recommend, if you need further clarification, please refer to ICI module. If I explain each and every point, then the video will be very lengthy. Now, payment of commission on export under the rupees estate credit route, except commission up to 10% of invoice value of export of tea and tobacco. So this 10% limit you should have to definitely remember, because the MCQ can be found from this particular point. So matlab, a commission can be made up to 10% of invoice value of tea and tobacco under your current account transaction, that is permitted. Apart from that, not even a single percentage is allowed under your current account transactions. Payment related to callback services is completely prohibited. Remittance of interest income of funds held in non-resident special rupee scheme account. If you are having any interest income on funds which is held in non-resident special rupee account, then that is also not, you are not entitled to remit this income to outside India. You are not eligible, you are not entitled to make any remittance outside India for the purpose of visiting Nepal or Bhutan, or any transaction with the person who is residing in Nepal or Bhutan. So for those transactions also, you are not eligible to make any kind of current account transaction. Now, schedule 2 talks about transactions which need prior approval of central government. So there are different transactions for which different ministries has been prescribed. So I have taken the entire table from the ICI material only. If you see cultural tools, if you are going to conduct, you have to take permission from this industry, this particular ministry. If you are going to make advertisement in foreign print media for any purpose other than promotion of tourism, foreign investment or international bidding, which is exceeding $10,000 by state government or public sector undertaking, then you are mandatorily required to have prior approval of the central government. But if you are promoting any kind of tourism, foreign investment or international bidding, even if the amount is more than $10,000, you need not to take prior approval of central government. So these, wherever the limits are mentioned, please be careful, and MCQ can definitely be from these kind of limits. This one is also, you read your own. This one you can read. This one you can read on your own. Let me tell you this point. This is a very important, and this was asked in my examination. Remittance of prize money, sponsorship of sports activities abroad by a person other than international or national or state level sport bodies, if the amount involved exceeds $1 lakh. If you are making any remittance of prize money of sponsorship of sports activity abroad, and you are not a person which is a national or international or sport or national or international or state level sport body, and if the amount is more than $1 lakh, then you need to take a prior approval of the central government. This is again a very important limit you need to take into account. Remittance for the membership of P&I club. This was with respect to schedule 2 transactions which needs prior approval of central government. Now we are going to cover schedule 3, which needs prior approval of whom? RBI. Schedule 3, RBI. 3 means RBI. Now, subsequently it talks about an individual can avail foreign exchange facility of up to $250,000 for the following transactions. Matlab, these are the list of transactions. If you are making any of these transactions, then you have a limit of up to 250,000. But if you are making the remitting amount in excess of 250,000 for any of the transactions mentioned below, then you need to take prior approval of Reserve Bank of India. Please be careful with this. Private visit to any country except Nepal or Bhutan. If you are making any gift or donations, you are going abroad for the purpose of employment, you are going for the purpose of immigration, maintenance of close relative abroad, travel for business, attending conferences, specialized training expense for meeting medical expense, checkup abroad, or for accompanying as attendant to a patient going abroad for medical treatment or checkup. Matlab, you are going abroad for business, for attending any conference, for attending any specialized training, or for meeting the expenditure of medical expenses, or you are going abroad with a person being an attendant to such patient who is having that treatment outside India, then the maximum amount of remittance can be 250,000 under LRS liberalized remittance scheme. But if you are going to make payment in excess of 250,000, then you need to take prior approval of whom? You need to take prior approval of Reserve Bank of India. Further, point number 7 talks about expense in connection with medical treatment, studies abroad, and other current account transactions. Further, wherever you see these star marks, these star marks, these are very important. It says that for the purpose mentioned in item number 4, 7 and 8, More than 2,50,000 is allowed under LRS liberalized remittance scheme if it is so required by the country of emigration, medical institute or university respectively. So a question was framed from this particular point in my examination, which was that remittance for the purpose of studying abroad is made in excess of 2,50,000. Is there any requirement of RBI approval required or not, or if there is any contravention for the of the FEMA provisions? So the answer to this question is no, since this is specially covered under your star mark special point saying that for the purpose of connection with medical treatment, education or emigration, you can make payment in excess of 2,50,000, that is allowed, and you need not to have approval of RBI if it is required by the country of origin, medical institute or university respectively. Alright, now this is again a very important point. A person who is resident but not permanently residing in India and is a citizen of foreign state other than Pakistan, and also or is a citizen of India who is on deputation to the office or branch of foreign company, subsidiary or joint venture in India of such foreign company, then they can make remittance up to their net salary. So what does the net salary means? Net salary means after deduction of applicable taxes, provident funds and whatever other deductions that are mentioned are to be deducted, and then only the net salary can be remitted outside India. In that case, you need not to have prior approval of RBI if the amount of remittance is in excess of $2,50,000. Now the point number B talks about donations. If you are going to make donations from this exceeding this particular limit, then RBI approval is required. If up to this limit, then no need to have RBI approval, and the same thing applies to all the next 3-4 points. Now if you are making donations exceeding 1% of their forex earnings during the previous 3 financial years or $50 lakhs, whichever is less, then sorry, if you are making payment in excess of this limit, then you need to take prior approval of RBI. These limits are very important. From this also a question was framed by examination. So wherever you see the limits are there, examination question is coming from those limits. Commission per transaction to agent abroad for the sale of residential fleets or commercial plots in India exceeding $2,25,000 or 5% of inward remittance. You are making a commission payment of $25,000 or 5% of the foreign remittance. Let's say $1 lakh may you sold some flat or commercial property outside India, so 5% of that would be 5,000. So 5,000 or 25,000, so whichever is higher, 25,000. If you are making payment in excess of $25,000, then you need to have prior approval of whom? RBI. Remittance exceeding USD 1 crore 10 million US dollars project for consultancy with respect to infrastructure project. If there is a consultancy project that is a kind of infrastructure project, then the USD limit is 10 lakh US dollars. 1 crore US dollars, that means basically 10 million US dollars. But if it is other consultancy project, then it is only 1 million, that is 10 lakh dollars only. If you are making payment in excess of this limit, then you have to take approval of RBI. Now this point number E talks about remittance by an entity in India by way of reimbursement of pre-incorporation expenses. So this would be the higher of exceeding 5% of total investment brought into India or US dollar 1 lakh, whichever is higher. So if you are making payment in excess of this, then also need to have a prior approval of RBI. If you see all the cases, it is higher. Here also it is higher. Here also it is exceeding, that means higher. Here also it is higher. Only in case of donation it is lesser. So please, this is a shortcut to remember which is less and which is higher. So in case of donations only it is less, all others are higher amounts. Now important points: if remittance for Schedule 2 and Schedule 3 transactions is made out of RFC account, then no approval is required of central government of RBI respectively. Matlab, there is a RFC, resident foreign currency account is maintained. If you are making remittance out of that account, then no need to have any kind of approval from central government of or RBI with respect to Schedule 2 and Schedule 3 transactions. Point number 2 talks about if remittance for Schedule 2 and Schedule 3 transactions is from EEFC account. There is an account called exchange under foreign currency account. If you are making a payment from that account, then also no need to have prior approval except for the two transactions, which is remittance for membership of P&I club, which is covered under your Schedule 2, and Schedule 3 ke under this particular transactions commission for sale of residential plots. If these two transactions are conducted, even though the amount is made from EEFC account, you need to have prior approval of central government of RBI respectively. Alright, yes. Now moving on to the capital account transactions. So what are the capital account transactions? A person resident in India may hold, on, transfer or invest in foreign currency security immovable property situated outside India if they were acquired, held or owned by such person when he was resident outside India or inherited from a person who was resident outside India. So this is again a very good condition. You can hold any kind of foreign currency security or any kind of immovable property outside India if such property was acquired by you when you were residing outside India, when you had purchased that property when you were residing outside India, or you have inherited that property from a person who is resident outside India. So in such a case, you can hold that property in your name. The same condition applied to the person resident outside India. If such person is resident outside India, he can hold any kind of property, currency or security or immovable property in India if such property, currency or security is acquired by such person when he was resident in India or inherited from a person who is resident in India. Now again, current account transactions, capital account transactions, there are also 3 schedules which talks about permissible capital account transactions, means these transactions are completely permissible under FEMA. Permissible capital account transactions for person resident in India and prohibited capital account transactions for person resident outside India. So these are the 3 schedules under your capital account transactions. I would recommend you to read it once. If you read it once, you will be able to recall it properly. Let me clear this for you. Prohibited capital account transactions for person resident outside India. A person resident outside India cannot undertake any of these transactions. This is a very important, and this real estate is even more important, and MCQ was formed from this particular point also in my examination. So what are these prohibited capital account transactions? This is investments in business of chit fund. You cannot make any investment in chit fund business. As a Nidhi company, you cannot incorporate. You cannot undertake agricultural and plantation activities including farmhouses. You cannot undertake real estate activities, but again there is some exemption we will read on the later part. And you cannot trade in TDR, that is transfer of development rights. These are the 5 completely prohibited transactions which you cannot undertake as being a person resident outside India. Now what does the exemption to real estate says? A real estate business shall not include development of township, construction of residential, this is commercial, okay, this is commercial, premise, roads, business, REITs basically real estate investment trust registered with SEBI, etc. So what does real estate activity does not include? So these activities is not included in your real estate, and therefore these are not covered under your real estate activities. Therefore a person resident outside India can easily undertake any of these activities, and these are permissible capital account transactions. This is what a very important point. Now moving on to the overseas direct investment by resident individuals. Now what does the definition means? So important definitions is financial commitment. So here a question was from, this is 50% of performance guarantee. A question was formed from this particular point also in my exam. Financial commitment, amount of ODI by way of contribution to equity loan and 100% of guarantee amount. Matlab equity loan, debentures, preference shares, convertible instruments, any instrument you take, 100% of financial 100% of that will be covered under financial commitment, but 50% of performance guarantee will only be covered under your financial commitment. This is the important definition. Number 2, ODI routes. What are the routes under ODI? Overseas direct investment. Matlab person resident in India can make outside India investments. So what are those routes? There is an automatic route, there is an approval route. And approval route can you need a prior approval of RBI, central government, etc. etc. Under automatic route, you can make maximum investment of $1 billion or 4 times of the net worth, whichever is higher. Whichever is higher, you can make investment. But if the amount of investment is more than $1 million, then you need to take prior approval of whom? Prior approval of RBI is required in this particular case. Now we are moving on to the FEMA Export of Goods and Services Regulation 2015. So again very important from exam point of view, from MCQ point of view, a lot of MCQs can be from this point also. Now whenever you are exporting goods outside India, then you need to file a declaration to the custom manual code. What would be the amount of declaration and what would be the procedure we will be studying. So what would be the amount of declaration that you will be filing in the declaration? Amount what would be? So the amount, if it is ascertainable, then you have to mention the full export value of the goods or services. But if amount is not ascertainable, then you have to mention the value of export value that you are expected to receive, that you have to mention in the export declaration form to the custom manual codes. Alright. Now exemption from furnishing EDF. EDF बोले तो export declaration form. You need not to furnish export declaration form if you are undertaking any of these transactions. So if you give it a read, you will be able to easily understand. You highlight the important ones. I will highlight. Gift of up to 5 lakh. If you are making gift outside India of up to 5 lakh, then you need not to file export declaration form. If you are having any aircraft engines, spare parts for overhauling and or repairs abroad, subject to their re-import in India within a period of 6 months, then also you need not to have file export declaration form. These are very easy to understand. You need to go through your own, then you will be able to understand. Now, how many copies are to be submitted for EDF? For EDF export declaration form, this EDF is for goods and soft tax is basically in case of services. So EDF duplicate copy of custom officer. Duplicate copies would be submitted to the custom officer. Upon validation, he will transfer the original copy to the nearest RBI office and the duplicate to the exporter would be submitted. In case of soft tax, you have to file the triplicate copies to the officer of IT, information and technology. Original copy would be submitted to RBI, duplicate to the exporter, and third copy would be held by the respective officer for their record. Now, realization repatriation of export value. This is a very important from exam point of view. Realization repatriation is to be made within 9 months from the date of export. The date when your goods are exported, within 9 months you have to repatriate the export value of goods and services into the India. This is what the timeline for 9 months. Now, if you have transferred goods outside India to a warehouse outside India, then in such a case you have to realize the money within 15 months. This 15 months condition is only applicable in case of warehouse. This period may be extended if there is a reasonable cause and application is made to the ID category 1 banker. Now, submission of export document to the authorized dealer within 21 days from the date of export declaration form or certification of export form. Whenever there is a certification of export form is provided or EDF is submitted, within 21 days you have to transfer all the document to the ED banker. Alright. Now, advance payment against export. You have received advance payment for the export to be made. Then, in such a case, what is the maximum period up to which you have to make the export? Now, shipment is to be made within 1 year from the date of receipt of advance payment. Whenever you receive the advance payment, from that date within 1 year, you have to mandatorily ship the shipment. Okay. Now, what should be the rate of interest? If any payable on the advance payment, it shall not exceed LIBOR plus 100 basis points or other rate prescribed by RBI. Let's say you are not able to make so let's say you have to make payment, you have received advance payment, you have to ship the goods within next 1 year. So the next 1 year, what would be the maximum amount of interest rate you can pay to the exporter, to the importer of the importer country? The rate of interest shall not exceed LIBOR plus 100 basis points or other rate prescribed by the Reserve Bank of India. Now, if shipment is not made within 1 year, then the amount of refund along with interest payment should be made after prior approval of Reserve Bank of India. Let's say you are not able to make export payment, then in such a case, maximum amount of the refund along with the interest, the amount can be remitted to the importer of the importer country with the prior approval of RBI, and without that you cannot remit the refund, you cannot pay the refund along with the interest. This is what this provision talks about. Now the next point talks about possession and retention of forex. Any person resident in India is permitted to retain in aggregate foreign currency not exceeding $2,000 or its equivalent in the form of currency note, bank notes, traveler checks acquired by him. So maximum of $2,000 you can hold. This is for person resident in India. Any person resident in India. All right. Now, what are the penalties if you are not complying with any of the provisions provided above in case of export of goods? Then if the amount is quantifiable, then the amount of penalty could be up to thrice the sum involved in the contravention. If it is not quantifiable, then the amount would be up to 2 lakh rupees or 5,000 rupees per day until the contravention continues. This is what the section 13 talks about. Now, compounding of contravention. Can you compound the contravention? The answer to the question is yes. It is to be compounded within 180 days of the receipt of application by the enforcement director. Appeal against the order of appellate tribunal to the High Court is to be made within 60 days. So I have mentioned only the relevant provisions which are important from the exam point of view. Wherever there are time limits, wherever there are limits, so those I have mentioned over here for your easy reference. This was all about export procedure. Now we are going to start with import procedure. Now, time limit for settlement of import payments. So up to what time limit you have to make the payment to the exporter of the other country? You have imported goods into India. What is the time limit up to which you have to make the payment to the exporter of that country? Now the time limit, normal import if you have made, then payment is to be made within 6 months. In case of export, the time limit was 9 months, you remember, right? In case of import, the limit is 6 months. Durable goods are there, let's say fridge or TV, where there is a guarantee condition is also attached. Then 70% of the payment is to be made within 6 months, and the 30% is to be made after the expiry of guarantee period. Let's say you imported 100 pieces of fridge from outside India, and the guarantee period is of 3 years. Let's say then in such a case you have to make 70% of the export value, the whatever freeze amount is there, 100 freeze ka jo bhi amount hoga, you have to make the payment within next 6 months. 70% amount you have to pay, and 30% upon the completion of 3 years of warranty period you have to make the payment. This is what your the timeline time limit with respect to payment in case of import. Now deferred payment arrangement is allowed or not? Yes, deferred payment arrangement is allowed for a maximum period of 5 years. Limit of extension. So what is the amount of what is the limit, time limit? If the can the time limit for the payment to the exporter of the other country can be extended or not? So the answer to the question is yes, and it can be extended only if there is any granted on account of dispute या फिर financial difficulty of up to 6 months at a time, maximum of 3 years each. मतलब अगर आपके पास financial difficulty है या फिर there is a dispute with respect to the payment, then the amount, then the period can be extended maximum for a period of 6 months at a time for a total period of 3 years. मतलब 6 6 6 6 ऐसे करके 5 times the 6 months period can be extended. All right. Now payment delayed due to dispute or financial difficulty, then extension is allowed. Extension is allowed as we saw in the point number 4, and the interest may be charged for a maximum period of 3 years. The interest that you will be paying is for a maximum period of 3 years only. Again on this point also exam MCQ was asked in my examination also. Point number 6 talks about circumstances of extension, when the extension can be granted. There should not be any investigation that is pending before ED, CBI or other agencies. Extension can be more than 1 year if importer current outstanding does not exceed $1 million or 10% of any import remittance during the preceding 2 years. Only then extension can be granted for a period of exceeding 1 year. Now import of forex. If you are importing forex from outside India, you are sending into India, you are sitting outside India, you are sending the forex money into the India, then any amount can be sent into India, and it should be made through e-transfer only, electronically it should be transferred. But if you are coming to India and bringing the foreign currency into India, then there is a cap over there. Currency bankers, not travelers check, maximum of $10,000 you can get into India, and other currency like only currency notes only up to maximum $5,000 you can bring into India. Well, only currency notes, then $5,000 maximum limit. If along with currency notes there is also bankers note, travelers checks, then the amount shall extend to maximum of $10,000. Again, a very important point from exam point of view. Import of Indian currency. Can you import Indian currency? Returning from Nepal or Bhutan, is it allowed? No, you cannot import Indian currency into India. So this provision was with respect to import of foreign currency. This is with respect to import of Indian currency. INR can you bring from outside India? So the answer to this question is, in case of Nepal or Bhutan, you cannot bring any, there is no limit for bringing INR from Nepal or Bhutan, but there is a maximum denomination limit of rupees 100. Matlab maximum 100 rupees note you can carry from outside India to India. Any other country, then maximum of 25,000 rupees you can import into India. INR currency you can import into India. So this is again an important limits for the from the perspective of MCQs. Now moving on to the important part, external commercial borrowings. Can you have external commercial borrowings or not? The answer to this question is yes, you can borrow external commercial borrowings. What is the limit and leverage? Eligible borrowers can raise ECB up to $750 million or its equivalent every financial year under automatic route. Alright, this is point number 1. Point number 2 is, further in case of FCY denominated ECB raised from direct foreign equity holder, ECB equity liability ratio for ECB raised under automatic route shall not exceed 7:1. However, this ratio is not applicable if the amount of outstanding amount along with the amount that is you are proposing to borrow from outside India is up to $5 million. Then the ratio of 7:1 is not applicable. Again, important the limits from the exam point of view. How ECB can be arrive in India? ECB can arrive into India by way of automatic route or approval route. Approval route के अंदर borrower raising ECB is subject to RBI approval, and again automatic route there is no need to have approval, and you can borrow up to $750 million every financial year. Issuance of guarantees allowed by financial institutions or NBFCs is allowed or not against ECB. So it is completely not permitted, it is completely prohibited. Parking of ECB proceeds. Once you have received ECB external commercial borrowing from outside India to India for foreign currency expenditure, then it can be parked outside India until its utilization. But if it is for INR expenditure, matlab you are going to bring that money into India and expend in INR, then it can be retained with ID category 1 banker till it is completely utilized, and it can further be invested in term deposit with AD banker for a maximum period of 12 months. Again, important time limits from the exam point of view. Any drawdown in respect of any ECB should happen only after obtaining LRN from RBI. Loan receipt number should be obtained before you are withdrawing any external commercial borrowings. Any change in terms and conditions of external commercial borrowing is to be reported to DSIM. DSIM stands for Department of Statistics and Information Management. Within 7 days, you have to report to the DSIM department. Point number 7 talks about actual ECB transactions to be reported in ECB form number ECB2 returned through AD category 1 banker plus should reach to DSIM office within 7 working days from the end of the month in which whenever you are having any ECB transactions. So this ECB2 from e-filing perspective is important, form number ECB2. Before this, so let us go with this provisions. Hedging or coverage. So ECB borrowers are mandatorily required to have cover the principal as well as the coupon through the financial hedge. After this, let's understand this ECB filing facility for oil marketing companies. Minimum average maturity period should be of 3 years. Mandatory hedging is not allowed, is not required for in this case, and minimum overall limit should be $10 billion or its equivalent. Okay, ECB for startups. Company registered by DPIIT. So startups, a company which is recognized by DPIIT, then only that company is eligible for this particular ECB, ECB provisions. Minimum MAMP is 3 years. Amount USD 3 millions or equivalent per financial year. Hedging eligible to hedge. They may or may not hedge in this particular case. Okay. Now this is with respect to 1 minute. This one you can write down over here. Here you write down FCY denominated, and you should write down INR denominated ECB. ECB basically stands for external commercial borrowings. So write down FCY denominated, and here it is INR denominated. Eligible borrowers, you can read on your own and you will be able to understand. Yeah, minimum MAMP is very important over here, and MCQ can be definitely from here. MAMP for ECB will be 3 years. Call and put options if available shall not be exercised prior to completion of MAMP. However, for the specific categories, MAMP will be as prescribed therein. Generally, MAMP will be of 3 years, but these prescribed categories MAMP will be as given over here. I would definitely request you to kindly go through all these limits, and these are very important from exam perspective. Okay, all in one ceiling per annum. Matlab whatever cost for the external commercial borrowings, interest cost, flotation cost, transaction cost, all shall be maximum of what? Benchmark rate plus 500 basis spread. 500 plus or minus can be there. In case of INR denominated, it would be benchmark rate plus 450 BPS. Alright, other costs, whatever cost you are incurring like flotation cost, etc., all that shall not be more than 2% of the over and above the contracted rate of interest. It should not be more than 2%. Negative list, again very important. So for what activities you cannot utilize your external commercial borrowings. So these are very, very important ones. Definitely go through real estate investment in capital market, equity investment, working capital purposes, etc. Exchange rate, not of much importance. Hedging provisions, yes. If you see here, further such companies are required to mandatorily hedge 70% of their ECB exposure in case the average MAMP is less than 5 years. If your MAMP is less than 5 years, then 70% you have to mandatorily hedge. Alright, the designated AD category 1 shall verify that 70% hedging requirement is complied with during the currency of the ECB and report the position to the RBI through form number ECB2. Further, in case of INR denominated, hedge their exposure, are eligible to hedge their exposure in rupees through permitted derivative product under category 1 Banker of India. These were provisions with respect to, yes, okay. Now this is not of importance. Yeah, change of currency of borrowings, is it permitted or not? Can you change from FCY denominated to INR denominated ECB? So it is freely permitted. But can you change INR denominated to ECB denominated? So it is completely prohibited. All right. Okay, yeah, that's all. This was about all about the revision of your FEMA. I think we have covered most of the provisions, most of the important provisions we have covered in this particular revision series. If you like the video, please share this video to your all the friends, and do comment in the comment section and let me know if how did you like the video. Thanks a lot for watching. Thank you so much. See you in the next video.